A new survey sheds light on where high net worth individuals are investing their money. And for more analysis, I'm joined by Bill Sullivan, head of Global Financial Services Market Intelligence at Capgemini, which conducted the survey, along with RBC Wealth Management. And Bill, these individuals invest about a third of their portfolio in stocks, but also a pretty significant portion in cash, right?
Yeah, no, I think one of the findings we've had the last couple of years we've done this study is we see high levels of cash for high net worth individuals. What may even surprise you more is for North America actually has the highest level of assets in equities. So other regions actually have smaller asset allocations to equities, and they're investing in fixed income and real estate and alternative investments, but they have a desire to keep I think it's almost a quarter of their portfolios in cash, and they're using that cash and they like to have that for lifestyle needs as well as protecting against market volatility.
So the high net worth individuals follow the adage, stay diversified just like everyone else.
Yeah, absolutely. And I think what we're also seeing is high net worth individuals still remaining some allocations outside the U.S. So they have a slightly smaller allocation outside of their home market than other regions, but are still having, I think it's around almost 25% of their assets are held outside the U.S. So they are diversifying across asset classes, but also across regions as well.
And why is that? Is regulation in the U.S., is that a factor?
I think regulation may be a factor, but I think more so around searching for returns. Now, of course, the U.S. has had strong equity markets, so you're not necessarily going to be finding significantly higher returns outside. But just in terms of diversification and looking for towards emerging markets in other areas, I think it's been a good practice, and they've been following through on that. Although probably a little bit less so than maybe some of the other markets like Europe and Asia, which do a little bit more on international investments.
Yeah. Now, the population of high net worth individuals, which we should say for our viewers is anyone with at least $1 million in investable assets. That's not including their primary residence. Is that right?
Exactly.
So the population of these individuals rose almost 9% last year, but that's a lot less than the nearly 17% increase we saw in 2013. So they're growing, but it's slowing. What is driving the softness here?
Yeah, there's no question. We saw strong growth rates. I mean, I'd still say 9% is a good number, but nothing like it was last year. And I think we're starting to see, it could be an economic element. It could be in terms of where they're investing their assets. But generally speaking, one of the things we found for the U.S. is, the global growth of high net worth individuals largely was driven by the U.S. So I think we added almost 1 million new high net worth individuals last year. Over half of those came from the U.S. and China. So U.S. is still really driving that high net worth market, and they're by far the largest market in the world.
And you also said India was a pretty big factor as well.
Yeah, so India, Asia Pacific passed North America again in terms of high net worth population. So they just snuck ahead in terms of population, and India had the fastest growth. So I think it was 26% growth in population. China was, I think, around 17%. So those two markets are really driving the growth in Asia Pacific.
All right, Bill Sullivan, thanks very much for coming in.
All right, thank you.
I'm Scott Gam, and you're watching The Street.